If you have a solo 401k, understanding how LLCs work could completely change the way you think about investing your retirement funds. Most people think a retirement account can only invest in stocks, mutual funds, or ETFs, but a properly structured solo 401k can potentially invest in real estate, private lending, private businesses, precious metals, and many other alternative assets. As investors begin exploring these opportunities, they often hear the term LLC thrown around. Some assume it's just for business owners. Others believe it's only for liability protection. The truth is that LLCs can play several important roles depending on your investment strategy. Today, we're going to break down exactly what an LLC is, how it works, and why solo 401k investors should understand them, and some of the advantages that they can provide when used correctly. So let's dive in. First, let's start with the basics. LLC stands for Limited Liability Company. An LLC is a legal business structure that exists separately from its owner. Think of it as a container. Instead of owning an investment directly in your personal name, the LLC owns the investment. That container can hold many different assets, including real estate, bank accounts, private loans, businesses, and investment assets. One reason people use LLCs is liability protection. Imagine you own a rental property in your personal name. If a lawsuit occurs involving that property, your personal assets could potentially become involved depending on the situation. However, if that property is owned by an LLC, the LLC creates a legal separation between the investment and your personal affairs. This is why millions of businesses and investors use LLCs through the United States. But for solo 401k investors, LLCs can potentially provide additional benefits beyond liability protection. One of the biggest advantages of a solo 401k is investment flexibility. Unlike many employer sponsored plans, a properly structured solo 401k may allow participants to invest in a wide variety of assets, again, including real estate, private lending, private placements, certain precious metals, private businesses, and many other investment opportunities. However, regardless of what you invest in, the retirement plan must remain separate from your personal finances. So that is extremely important. The IRS requires retirement assets to remain distinct from personal assets. Mixing the two can create prohibited transactions that may jeopardize the tax advantage status of the account. This is where LLCs often enter the conversation. In some situations, a solo 401k may own an LLC. The LLC then becomes the entity that owns investments. Rather than having multiple assets titled directly in the name of the retirement plan, investments may be held through the LLC structure. So, for examples, you have your solo 401k, you have the investment LLC, and then you can buy a rental property under that. Or you have the solo 401k, the investment LLC, and then you buy private loans through that. Or even you have the solo 401k, the investment LLC, and then you have any other alternative investments you may be interested in. This structure can create operational simplicity for some investors because multiple investments can potentially be managed under a single entity. Again, this isn't necessary for every investor, but understanding how LLCs work allows you to better evaluate potential investment structures as your retirement portfolio grows. Another reason investors use LLC is organization. As portfolios become larger, keeping investments organized becomes increasingly more important. Imagine owning 3 rental properties, 2 private loans, a precious metals investment, and a minority ownership interest in a private company. Managing record for all of these assets can become complicated. An LLC can provide a centralized structure for managing those investments. This may include bank accounts, investment records, contracts, property records, loan documentation, accounting records, and so on. Good organization becomes especially important because solo 401k investors should maintain strong documentation for every transaction. Many investors researching LLCs eventually come across Wyoming. Wyoming has become one of the most popular states for LLC formation. And why is that? Because Wyoming is known for strong privacy laws, business-friendly environment, low-cost annual fees, and asset protection features. Many investors appreciate Wyoming because it offers a straightforward and business-friendly environment for LLC ownership. Whether an investor chooses Wyoming, Texas, or another state depending on the individual goals and circumstances, the key takeaway is understanding that not all LLC jurisdictions are identical. Different states may offer different benefits, cost more or less, have different filing requirements, and administrative rules. No discussions about solo 401ks and LLCs would be complete without discussing compliance. The biggest mistake investors can make is assuming an LLC allows them to ignore retirement account rules. It does not. Whether investments are held directly through a solo 401k or through an LLC owned by the solo 401k, the retirement plan's rules still apply. Investors should avoid prohibited transactions, which are avoid mixing personal funds with the retirement funds, avoid self-dealing, avoid transaction involving disqualified persons when prohibited by IRS rules, and you cannot buy collectibles or any other items that do not fall within the precious metals or the IRS guidelines for what you can buy. The LLC does not remove compliance requirements. It simply acts as another layer within the investment structure. Understanding these rules before making investments can help investors avoid costly mistakes. One strategy some investors explore is creating multiple layers of separation between activities. For example, a holding LLC, an operational LLC, separate investments, separate bank accounts, separate records. The goal is organization, separation, and risk management. Think of it like building a financial fortress. Each layer serves a purpose. Each entity has a defined role. Each investment remains organized and documented. Again, the structure depends on the investor's goal, but understanding LLCs allows investors to think strategically as their retirement assets grow. The bottom line is this. Every solo 401k investor should understand LLCs because they are commonly used in real estate investing, private lending, alternative assets, business ownership, and many other retirement investment strategies. Even if you never form an LLC, understanding how they work helps you become a more informed investor. If you'd like to learn more about solo 401ks, alternative investments, checkbook control, LLC structures, and retirement planning strategies, visit survival401k.com. Also, don't forget to like this video, subscribe to the channel, and leave a comment below telling us what investment strategy you're most interested in using inside your solo 401k. Thanks for watching, and we'll see you in the next video.